Morning. Good morning, everyone. Good afternoon and good evening, wherever you are. DayTraderRockStar here with you. Overnight session. Just going to catch us up on some MES futures, etc. That whole basket of futures trading. These rules, these tips, call them what you will, can be applied on any of your trading. Whatever you're trading, as long as you're trading divergences, trading kind of an HPS style where we concentrate on trends, trend lines, moving averages, strength, relative strength. A lot of different things go into this, into the pot, but the majority of the time is we're really starting to see reversals on. We understand how stochastics work, and we understand when we see a good divergence in that it represents a reversal in trend, usually on the short-term time frame. And that's where you make your opportunities. That's where you make your money on these, because these are the only areas that you really predict well that you're going to get a move. Because if your market's trending down, you're either with the trend. If you're counter trending, it's very hard to do. But this is one technique that'll let you give you that edge to find those little moves. Now we rather have choppy markets all over. Trending markets are very hard to counter trend, and I think the last couple days here, since Fed Powell came out of Jackson Hole and kind of put things put the market on its heels here, it's kind of up in the air where we, there's a good argument for the market to pull back. Yet we've seen this all before, and at one point you're going to say how they have a plan. At what point, how much is this market going to pull back? You're always looking at levels. We don't know what levels they're going to be. So the one thing that's definite, though, that each day there is opportunities in this market, and even if the markets are not participating or acting like you want them to act, maybe you're net long or net short, and the market's just not doing what you expect it to do, there's still these short-term opportunities in the market where you can make money. And I think this is so important because it keeps you out of that. It's a really great way of trading. It's a fantastic way of trading. You're not holding anything overnight. You're waiting for your opportunities, and you have defined risk. It's fantastic. But on days like this, you could get extremely frustrated with the markets and bored. But I want to just prove to you again that we don't have to be bored. You just have to wait for the setup. You can't pretend the setup is there. You can't just say, all right, if you do have a good argument for a good setup and it meets all the criteria, yes, you got to take it. But there's also other things that come into play, meaning, is there news that's affecting the markets at the time, or is there a certain aggressive trend that's affecting the markets? And I would have to classify this week as an aggressive trend to the downside, so it's going to be harder to get those short-term bounces. All right, so what we're going to do is we're going to concentrate on where we have the edge. I mean, we have the edge. We just have to wait for it. It might not happen in front of us at 100% all the time, but when it does happen, we have to strike, and we got to continue to. And then when the markets are good, then you strike and you do the other stuff. But until those markets play, play the way you want to play, don't play the market's game. Unless you're going in that direction, or you feel, because it's not easy. So we're going to go over over a little basic review of what we're talking about in case there's some new people out there trading. But normally I jump right into this expecting everyone to know what the divergences are, and that's sometimes not. But I've been doing it for so long, and I think I've been, you've been doing it out there with me if you're listening for so long. That's why you're listening tonight or understanding what we're talking about. But for those who do not know, I mean, scalping the markets, short-term trades, nothing that you're holding from one day to the next, nothing that you're checking your portfolio each week to see if you're up or down. These are trades that happen throughout the day. So, what you need to do is have that time to be put in front of the computer. That's always the criteria. I tell people I want them to trade. I said, well, you have time. This trading's, now I could definitely put you on some good trades, but you have to be able to be in front of the computer at that time, or at least take the trades. And that's hard. That's hard, especially if you're trading this style of trading. This requires a lot of screen time if you're focused. Now, that's supposed to be my job, but it's hard to get these alerts out when you have a 1 minute divergence. We do have the bots that help you. The bots send out alerts on Twitter too. You have the Rock bot that, and you could also have your own. If you have the lifetime membership, you get the code, and you can run the code yourself on your own machine, and you can adjust that to whatever time frame, because a divergence on the 60-minute time frame is going to be much different than the divergence on the 1 minute or 5 minute time frame. You're going to have a lot of time to play with that. When we find a divergence on the 1 minute time frame or a 3 minute time frame, which I've been really liking, those trades tend to last less than 10 minutes. Without, less than 10 minutes. So, that's fine. If you could accept that and understand that, that's something you cannot get into the habit of just saying, all right, I got the bottom of the market, it's going to continue. These trades, the divergence here, doesn't mean that the bottom of the day is in. It's going to get a nice move, and it might come right back down, take out the lows again. So you have to be so disciplined on your entry, but you got to be just as disciplined on your exit. All right? Now, just to kind of update you again on divergences, I'll probably bring up a couple pictures here. Let's start off with that. All right, let's kind of get things organized here, especially if there's some new traders out there. You're not going to want to miss this. You're going to want to be on top of this. All right, this is basically a divergence, and again, a little history behind it. George Lane, 1950s, oscillator, momentum indicator that shows the location of the close relative to the high-low range over the last set number of periods. So very simple formula, but it could be a little bit confusing if you're not used to this stuff. So it does take a little understanding of moving averages and understanding of that. But basically, you have a formula, or you have a stochastic oscillator, which is a percentage K line and a percentage D line, and they each measure, the formula, which takes how many candles you want to be looking back at. Maybe it's 9, 14, 30, 60, 50, but we typically do 9, 14, and 60. All right, so we look back 9 candles and does an average, and it plots that where the close is on a scale between the 0 and 100, and the stochastics are that scale. So when you get oversold versus when you get overbought, that moves up and down to the numbers between 0 and 100. And what we're looking for is a change in, normally you get a low with the price of the low, and you move up here, and you move the high with the price of the high. It just goes together. But what we're looking for is maybe the stochastics to start to turn quicker than the price. The price continues to move down, but the stochastics are turning. And now stochastics turning, that momentum indicator, if you could picture it like a rocket, that's the momentum behind the stock. And what happens is stochastics are starting to turn. That means the change in trend is happening, even though the stock is continuing to move higher. The momentum has driven the stock a little bit higher. The stochastics have rolled over. So you're starting to see what we call price stochastic divergence. The price continues to go higher, but the stochastics do not. And that's key, because the momentum has dropped, but you're able to get the best price for that. So we always look for that low, that lower low, but a higher low. And that's extremely important. The steeper of this between this low and this low, the steeper that is, the better the divergence. And that's important. That comes in. I know we just sometimes sitting there, we're waiting for, is this a divergence? Is that a divergence? I think I see one. I see, it's like, and then we're pulling out the protractor, and we're measuring it out, and it's just not, we want a good divergence. All right? So that's basically what the divergence is. And I kind of write down a lot of the entry criteria, just because I think it's important to have it written out, write it out yourself, make sure you understand it. Once you got it down, it's easy enough over time to see when these things set up. Now, divergence is, again, here's our stochastic oscillators down here, and there's 4 of them. And I've come up with the 4 two of these are standard stochastics. You know, the 9-3-14-3. This is something George Lane actually used when he developed his stochastics. All right, and he used fast stochastics, and then they went to slow stochastics, and then they went to full stochastics. And there was different variations of the stochastics you could use, but I recommend just staying on the fast. You're going to get the same signals with the fast. That's just I think it's really good. So here's a price level. It comes down. Stochastics always stage 1 of the stochastics have to be under that 20 line. We would like to see them. There is the divergences that hold above the 20 line. They're called mid-pattern divergences. But typically you're going to make a low. So we did make this little candle, made a low. We made it under there and we bounced. And we came back down. And what we're looking for is that low. I'm always looking for the lower low and how the stochastics are underneath us. In this case, you can see it's a much higher low. And that's the key. That was the only real good divergence of the day. And you can see the big move we had. We had the big move on this. And then there was actually some other ones on the Rockbot actually worked out really good, but they were on the 3-minute time frame. So this is on the 1-minute time frame. If you look at the 3-minute time frame, you're going to see just as good of setups on that, because 3 minutes really, really good. Maybe I could bring up this other chart over here and show you the 3-minute. Because I like to use the 3-minute. It depends on how you have your charts set up on your screen and how much real estate you're going to allocate to a chart, and maybe you have quad charts up. So this is the 1-minute time frame, and this is using the Ninja Trader. This is the Ninja Trader charts, and I have this stochastic set, but I can see them well on this too. I try to keep. Here you can see the nice divergence here. You see this candle low there, and that lower low, and that higher low, and that was it. They actually caught that trade and took it off. It went a little higher and eventually pulled back. Let's take a look at the 3-minute chart. The 3 minutes are also a great chart to learn divergences on, and they're even the bigger the time frame. This is kind of, I call it the sweet spot. And you might not even see. There was a little divergence here. You can see it right here at 145. 145. It was a 3-minute divergence. And if you look on the Rockbot is that indicator here. Let's move that over here and see if we could see. I want to move this on the rock. This is the Rockbot here. 3-minute. I have that running on the Rockbot channel. So the script is running on the 3-minute time frame, and I'm just going back to show you. Take a second here for everything to. So there was the 2 divergences today, and this is on 3-minute time frame. You can see the higher low there. And here it's a little bit trickier. It's not as great as high or low, but it does register and come in. But both of these are really good signals, and they took, they worked as expected. And again, the Rockbot here is kind of alert you to these divergences. Every situation is different. I don't recommend letting that thing run overnight by itself when there's, especially in this, newsworthy environment. But it's a great tool. All right. So we're always looking on that for the 3-minute time frame. But the 1 minute, you get more setups on the 1 minute, less on the 3-minute, less on the 5, less on the 60, of course. So you had that one really nice divergence here, and today watching the market sell off, we came in and we kind of had this nice little waterfall pattern. It was down here. It's very hard to, try to catch a bounce of falling knife like this. It's very dangerous, first of all, and it's very hard to do. So, we knew we had some follow through, and we knew that we were watching a support level that was going to break. That was the low of the previous day's low. So we did break that. Once we broke through that, we kind of really sold off. It took us under that 4,000. Then we got a bounce out of nowhere, just a decent bounce. It kind of might have been the divergence, the 3-minute divergence. I think it probably was 3-minute divergence on that. And we got a nice bounce up, and eventually got up, stood at 200, and then kind of rotated back down. But the weight on the market was down. You could feel that today. But yet again, it wasn't, wasn't against the odds of us going a little bit higher. So we were paying attention to it. But getting back to the understanding that this is the key. This is what we're here for. We're waiting for that setup. So there was a couple good ones. It was, again, the 145 divergence here. And then we had that 1 minute divergence here, which was, I thought was a great one. When you have a good divergence like that, and you have that recognizable channel, you have to step up and you have to take that. These are not divergences, even though we might be looking at them, say that they have a good feel to them. If I zoom out here, like here, I'm watching this come down, and I'm watching. I said, "Oh, that looks like a nice," but it's not a divergence. Look how deep it is underneath that 20 line. The key here, the steeper that divergence, the better you want. Yeah, you got a little bounce, but you didn't get past the 50. A true divergence, where you have that higher, will take you past the trend line that's currently has that price in. If the price is in some type of trend, 9 times out of 10, that divergence will break us out of that trend. And we also got to focus, you can also have these setups on the NQ, the Dow, the Russell. You have to have that opportunity there. Here was a good divergence overnight. And this is what we call a running divergence. It's actually one of the stronger divergences. You have a low and you have a higher low there. All right. And then you kind of popped and then you came back and you put in this reversal candle and you put in a higher low. So you took out the low. It didn't break lower. I mean, it was really clean, but if you typically see a divergence, you might have got in here and put that stop there and got stopped out. Once you see that reversal candle, you have to re-enter that. This is a very rare thing, but a running divergence like this is a very strong thing too. So if you get a second take at that divergence, and we get those all the time on the bot, it'll register both of them. That second one is usually the big one. So you don't want to miss that second one. Sometimes you can even feel maybe there is one happening. You just feel like, I want to see if we have one more. That was a really good divergence. And look what time that happened. What was that, 10 o'clock? 10 o'clock to 10:30. So we might run into a divergence tonight. But again, that would have been a great trade. I mean, look at the move here. 12 points at least. One even higher than that. So during all this time, there's a couple setups that we're looking for. When we see them, you gotta get them. That's my goal, to do them. I know it's not the easiest thing in the world. Sometimes when the market's not going on, you want to trade. You want to be in something. But just like, and again, this is where I pull out the analogies. Like in poker, I played on a poker tournament on a cruise ship, and I waited out. I waited for my good hands, and then I bet, and I was able to win that way. I came in second place. I didn't win, but I when I was in the money. And I always apply my divergence tactics, my stochastic theories to gambling. Blackjack, poker, anything that has some type of odds to it, that you can increase your odds by understanding the game. We increase our odds here drastically by understanding the game here. We understand what causes these. No one would look at this and how would they even recognize that we were going to move right here? But we can pretty much predict right at this point, this nice little pullback, right? Have a little wedge pattern going on, and that's what we typically look for. Now, I would have seen a 14-3 divergence here, which is stronger. When you have a 14-3 and you don't have a 9-3, that's another special case where I always take that's as a much stronger divergence. This was a little bit steeper than the 9-3 one. Doesn't happen all the time, but when you do, that's great. And that was a little trade there. Now, where are we right now? We're basically, we have a divergence, Johnny. Live divergence here. So, and again, you can see that little dip here. Little dip on the 9.3. This is pointing down. We talk about the you know, and I probably should have jumped in this already. I'm not going to chase it and make myself, but we'll understand that that was what we're looking for. You know, we even actually took out this low back here. When there's a big pop there, look at that big pop we got. All of a sudden, we're able to identify something like that. It gets a big pop. And why did we get a big pop there? Maybe it had something to do with the momentum shift in here. Other algos picking it up. Now it ran up to the VWAP, and this is again overnight trade. If you get a point on this, you know, you start to recognize that, hey, this is starting to hold up. I'm going to buy that. You can maybe get in here at 85.5. You get 86.5. Just saying, you have to take that off. This is overnight VWAP stuff. This thing is very choppy. You take what you can get on these things, but you have that. That's where you're betting. You know, the dealer has a 5-6 on blackjack, and you have a nice. You want to double down on your divergences. Get to trade and get out. Very tricky. Look at that, how the market just flushed right back down too. Now it is coming up on some news, and it looks like there might be some news breaking right now. I don't know if there's some Asian or European news coming out overnight. It was hit the Asian news first, and just saw something pass here, but I don't see what it is. Well, we like big reactions. That's one thing I do like. I like overextensions. There's a little divergence. We're going to wait and see. You know, we might actually show you a live divergence here. Let's take a look at it. I already have this recognizable channel. Top of the trend line here holding up. The VWAP held that pretty good. Look at how we're kind of... zoom in here a bit. Also always keep a candlestick counter on my charts. That tells us how many, you know, how much of that candle's left. Sometimes you get a nice hammer and you get only a second left. You can jump on it before, stuff like that. So you know what I'm talking about, right? So everyone understands. I mean, we have the opportunities. The technique is almost flawless. It's the timing, the discipline, and the patience. That's what is needed to be successful in this market environment right now. When the opportunity comes around, you get a deal on a stock, that's when you pick up the stock. But until then, you have your holsters, guns ready, the bullets are in it. You take it, you see a setup, you take the shot. All right. I wanted to show you a website that's good for an overnight news. Let's see if you can see that news breaking. I'm going to go to Forex Factory. And we'll go to the calendar, which comes right up on the screen, and it should adapt to your clock on your computer. So let's see where we are. So it's past Tuesday. It's going into Tuesday 7:30. So 7:50. Industrial production month over month. Japanese 7:50, and it's 7:34 now. And the retail sales, that might be dropping right now in Japan. That happens at this time. There's no set time frame. Well, maybe it comes out at 7:50. I'm not 100% sure. I know ours have dropped throughout the day. New Zealand, Australian markets. Consumer confidence comes out at 1 a.m. tonight. Housing starts 1 a.m. European CPI, core CPI, and tomorrow morning we have non-farm employment change. There is some things out there. That's at 8:15. So that's just a good little calendar. It kind of keeps you up to date on what's hitting right now. So one last time, I'm just going to go back, and I didn't point out the sell side divergences. I was looking for them too. There was a sell side divergence here. Pretty decent one. I came in at 210. And look at that nice move down. Pretty much until it ran into a divergence. I see this a lot. Sell side divergence leads to a buy side divergence. You get just a beautiful bookends there. This was kind of a divergence here too. Look at this. It was a double top. That little candle came up, but look at this, how weak this got. So another sell signal there, right at that candle. And look at that big drop from that point. That might have been, you might have got trapped on one here. It looks like a sell, but it was a running divergence. A running sell side divergence. As long as the third one is still lower than the first one. That's tough though. Market here sold off pretty hard. That's where the real selling came in. This is the overnight 5 o'clock in the morning trade. Little trend line action. It's 2 o'clock in the morning. O'clock. Here's that 10 o'clock divergence. Maybe we'll get one today at 10. I'm not seeing too much more here. Again, that's the key here. I mean, yeah, there's opportunities. You could go in here if you wanted to. There is a slight divergence here. It's a very tough one to read because of that one candle. It comes down and takes out the lows here, and it kind of holds up here. It's just a very hard one to see, but that one candle kind of pointed it out. Use those candles as your stop. You know, if you're going to take, this is where you have the opportunities. This is probably the best opportunity you can when you get a reversal candle. Use that as your stop. You know, but here you can't be looking at it and saying, oh, that's a divergence. But it isn't. It isn't. I'm not seeing. You really want to see that higher low. You had a higher low here. I might even have been a little cautious on that because the bounce wasn't that bounce. But either way, it did go. There's another sell side divergence. This one here failed up against the 50, the 200 and the VWAP. So they do, you know, and again, it depends on how you're trading these. You're going against a strong trending market. In some cases, you won't get the big moves you want to get with these. But, you know, this is a lot of time to go through. We're saying, oh, you know, you might say, well, I wish I just went long here. Yeah, you could do that. I mean, but I'm teaching you a technique that, you know, if you see, here it is right here. You know, that's a nice divergence right there. If you see that happen, that gives you more reason to get in. Stop is defined underneath the candlestick and off to the races. Now, you know, today we didn't have as many, so it would seem very frustrating. Tomorrow we might have 5, 6 of them. So we got to be ready for them. We got to be in the right state of mind. Oh, look at that market bouncing now. I got to keep an eye on this too. Don't get in the habit of feeling like you missed the opportunity and chase it. My worst case, you know, when I find myself making a mistake, it's because I think the market is stronger, or I think it's going to do something beyond what the big picture. You know, like, all right, this is going to rally. I'm not worried about short term, and I'll end up getting in there as a stochastic approach overbought levels, just because I feel maybe we're going to break out and move higher. That's totally wrong. You always have to give yourself the best opportunity. So you always take your long when you're oversold on that, and you're starting to turn back up, because that half the job is done for you. When you get in here, it's like, oh my God, I'm guessing that we're going to break out. 9 times out of 10, you know, it's just not the right move, and that's where we have to work on, or that's why I try to work on making sure that I'm not chasing because I believe something's going to happen on the big term. Get yourself into that disciplined state that, all right, the first pullback, I'll buy it. Take care, PR trader. Take care. Just getting oversold here. That acts a little bit better. That's probably one of the reasons why you could think that maybe it's going to turn back up. But look at this. Again, a little pullback. I've been enjoying the overnight trading more and more because of less algos involved. The setup still worked good. If you have a good setup, I definitely take it. It just seems to be a little, you know, the charts are not as tight, you know, the candles, but the patterns are there, and you see the moves off the divergence. I mean, there was a little divergence here, a little something going on here, and you can see the bigger picture. There is small little micro trends, mini trends. Let's see, we got a little pop up to the VWAP, which we started to go. There we go. Get a hold of this. China Shanghai reports 1 new local asymptomatic coronavirus case. 1 symptomatic case for August 30th. So they had 1 new case. That's not bad. Versus a 0 earlier. Uh-oh. So that's 100% change. They're going to go into lockdown. I want to leave you off with the looking at that rock bot again and taking a look on the 3-minute time frame. Look at the big candles here. When you have a divergence with a big candle, that's usually good for follow-through candles. So just, you know, I've noticed that a lot on this. The bigger the candle, the better chance of a follow-through candle. Just something to pay attention to. Again, this is running for us. I might actually put the 3-minute divergence on my account tonight. Let it run overnight live on the screen. Well, there it goes. So, market here popping here, coming out of that flag. Decent reversal candle. We see how we flatlined here, and this is turning up. Everything here is pointing. These are just a couple of the indications of momentum that is helping us figure this out. I've been looking at this for so many years that, you know, even a little wiggle in it tells me a whole story sometimes. And the different ways this sets up, the coil stochastic channel breakouts, the divergences, the mini strength versus, you know, the multiple time frames, the triple rotations. There's so many different things here to look at. So see what happens. We're still going to wait for that divergence though, and hopefully get an opportunity for a little rotation here. We did get up to that VWAP though. That candle came right up to that VWAP and then reversed off of it pretty good. 96, we'll call it 96, and now it's at 95 or 65. It was at 86, and now it's at 85. Sorry. Futures are going to close. I mean, the after hours stock trading is going to close in about 8 minutes. We did take off a trade MGAM tonight. I'm out of that one. I am looking for a couple for tomorrow, so I'll send this out also just to kind of give you an update on some. So what we're looking at. Anybody seen anything run after hours you want me to bring up for you? I'll bring them up fast on the room, in our chat room. Alright, there's the NBEV. That filed for bankruptcy. Right here. We looked at it when it got halted. It opened up down to 20 cents. and then bounced all the way to 36 cents, and it's kind of settled back here at 28 cents. Anyway, that's something that's going to move tomorrow. Not interested. Chewy here, earnings out. It did sell off. I kind of like this PaySafe. I was looking at it today with DT. Started to move. I mean, these stocks, these SPACs that have gotten crushed. You know, that at one point you're going to get a bounce on this, and I'm just thinking this is as low as I've ever seen it. So started looking at it for tomorrow. It's already started to move after hours. Sorry, they're starting to get a little move after hours here. Oh, they're going to file for bankruptcy next. That's why they're rallying. All right, PaySafe here, 195 here. So they filed something. I was looking at it, and I just noticed some volume at the end of the day here. So something's going on here. PaySafe, maybe for tomorrow. PSFE here. Keep an eye on it. It's already up to almost $2 here. So seeing a little volume coming into it also at night. 189 to 195. Market here back up to the VWAP. And what else I wanted to do? Oh, a little cricket action here. Nice cricket action there. Now market's flat on the day, flat on the evening right now. Oh, you hear the crickets. I don't know if you can hear those crickets. Crickets coming through pretty strong. Market's back into positive territory. Only up 50 cents, but half a buck now. It does look good, though. Does look good. We kind of broke out of that channel, pulled back. I wanted to see if we could get a pullback and get in it. It just happened so fast. The slower stochastic pointed up, giving us that momentum to the upside. That fast rotation got us down here, and then we just shot up off of that. Big pop here. I think we could take out the highs here. So I was just looking at some stocks here also, just to kind of keep us up to date. The Dollar General here continues to show pretty good levels. A recent upgrade by Goldman. In the last 2 days, it's been holding its own. So I'd expect any bounce in the market here to get this thing going off of the 200 and we'll just start moving back up to the 260 area. Seems to be holding that 200 area, 200 period moving average, but really good. The Weber here has been rumored to be a short squeeze candidate. WEBR. And hasn't really done much. It's sold off today some. An option in Biogen going out to September, and it's not really moving too much. We'll take a look at the daily on this. We'll see if it has any bounce tomorrow, but it doesn't look that great. 195. The one I think is going to squeeze tomorrow is CrowdStrike. And let's take a look at the after hours trade on that. CrowdStrike here actually held up pretty good. It sold off, came back. If it's not selling off, it's going higher. So, especially in these tech stocks, if it doesn't sell off, it's probably most likely going to rip higher tomorrow. So keep an eye on CrowdStrike, CRWD, for tomorrow morning at the open. I think that's good. That'll keep us busy for the morning. Alright, and the futures are going to be definitely on deck here. The Weber looking okay, 853. Alright, so I want to send this video out. Hope you enjoyed that. You can find all the information here at DayTraderRadio.com. Head over there. I'm going to continue on with the show tonight. So let me send this out.